For some thoughts on where international markets are heading this week, we do have on the line with us Michelle Schneider, Chief Strategist at Market Gauge. Mish, good morning. Always good to have you on the show. Let's start with the U.S. retail sales figure, which came in higher than forecast for the month of August, increasing by 0.6%. What do you think this tells us about the state of the U.S. consumer against a backdrop of weakening jobs data that we've seen?
Well, first of all, thank you for having me back and good morning to you. Well, yes, this not only was a beat, but we now have seen an incline in retail sales over the last three reports. And so the rumors of the consumer being burnt out obviously aren't necessarily true, but we have to look at this as a lagging indicator. What I thought was so interesting right now is wages cooled, still outpacing, though, inflation, and that could be one of the reasons why we're seeing people spend money. And of course, we know the labor market is weakening, and we don't know what kind of impact that might have. So overall, it was great news, and obviously the wealthy are out there spending money. The caveat, though, is that the whole sector, in and of itself, the retail sector, as far as how it relates to the rest of the market, is still, while spies are making all-time highs, it's still so far from its all-time high, which was made, by the way, in 2021 at the peak of COVID when people were home spending stimulus money and shopping. So we're good, but we're not amazing.
Mm. So the U.S. Fed is expected to cut interest rates by 25 basis points tonight. How many cuts are you expecting?
Well, right. It seems to me almost a lock that they will lower by 0.25% tomorrow. And then you have to look at the month we're in, September, and they won't meet in December. So the most they could probably do, unless they did something unusual outside of a Fed meeting, would be two more. And I think that probably fits the expectation. There could be a surprise. It's going to be so much, not just what they do tomorrow, but what they say going forward. How concerned are they still about inflation? How concerned are they about tariffs? And lowering interest rates while the markets are at all-time highs also, though, from a statistical standpoint, has been very bullish for the market. So it'll be interesting if they take that into consideration as well.
Mish, in your view, what would fuel a further market rally in the United States?
Well, at this point now, I think it would have to be, that inflation. To me, what could kill this market completely, and we're not seeing it yet, even with a declining dollar and rising gold and silver prices, which I know we're going to talk about, would be if inflation got out of control in other places outside of the precious metals. So short of that happening, which I think there's a great potential of it happening, it's just going to take some time, the market looks like it's fueled to go higher. And with an interest rate cut, that would certainly be good for the tech space. And we know that unless the tech space really rolls over here, we have a very good chance of marching on. If we hold 6,600 now in the S&P, up to about 7,000 could be a reasonable target. Of course, we always climb the wall of worry, so we look for things that could be in trouble to stop this outside of inflation, and that's something that people should watch too.
So what then would the sectors be? What are the sectors that you'd be looking at, I suppose, in this current market climate?
Well, right now, because of the potential of the rate cut, small caps and mid caps are what tend to lead in that environment. And so I think what we have to really look at right now is we've seen the Russells match the highs or get close to the highs of 2024, but not take them out. So if we actually surpass the all-time high, let's say, in those small and mid caps, I think that would present for a lot of good opportunity. They say that so far, those small and mid cap stocks are outperforming the general market by 2 to 1. That can continue. But I don't think that we can also dismiss the tech sector itself. Obviously, that's always been on its own fumes. But even hard assets, and besides just the whole idea of gold and silver, I think you have to look at Bitcoin as a digital asset, could really prosper in this. And I'm looking outside of other commodities like gas and oil And even the grains, some of them are looking like they're starting to bottom in the U.S. market, like corn and soybeans. So that's where I think it would be good to spread into some of those hard assets to sort of take your portfolio and make it a bit more rounded outside of just being gold, silver, and growth stocks.
So talking about gold and silver, gold is up 39% year to date. Silver is up 46%, both near all-time highs. Do you see more upside?
Well, certainly in silver, I think what's so interesting right now with silver over $40 an ounce, it closed close to $43 an ounce today. That looks like it's on a trajectory to go higher. What has changed fundamentally for silver is that A, it's been declared a strategic metal in the United States, so that makes it in higher demand. B, there has been now talk of a lot of bank buying and country buying, including Russia. And we know that silver, as long as we're starting to see more moves in energy space, and particularly in alternative energy space, that's a huge element that we need in that space as a conductor. So I would like to look at the silver and the gold ratio. That doesn't mean that gold wouldn't go up as well, and I think gold could go to 4,000. But we're looking for gold now. It would be more responsive to geopolitics, to the rising debt that doesn't get settled, to the potential of government shutdown. That would put the fuel behind gold. But if it's just the way we've seen sort of the status quo of all this accumulation, if silver starts to outpace, I would be looking at for the more upside than the gold at this point.
Well, on the other end of the spectrum, Bloomberg dollar US spot is down 9%. What's the outlook for the US dollar? I mean, with these rate cuts in the horizon.
Well, not great. The dollar has been in a decline for quite some time now. All we've seen in the dollar for the last couple of years has been more short covering rallies. If you look at the dollar right where it closed today, it's not quite at the July low. The July low in the dollar was 95.7. It closed just over 96 today. So again, if we're looking from a technical standpoint, we're a little oversold. We could see a bounce. But if we can't get back over 97, which is where I thought it broke down from, 97.5, and we take out that July low, which I just said was at 95.7, and I'm looking at DXY, by the way, the future, then I think we have a situation where we can see a pretty significant decline here in the dollar. And of course, that would certainly help the commodities market a great deal and might eventually reverse the move in the equities market if it gets too frightening.
Mish, before we let you go, can I just ask if there's anything in the political horizon that you see which could impact markets, given the fact that Congress is currently debating whether they can circumvent another government shutdown. There's been a lot of talk on political violence as well. Will any of this spook the markets in the days and weeks ahead?
Well, we certainly, given the unfortunate circumstance we just had with the political violence, did not affect the market at all. So I would say that short of a civil war or a great revolution, is probably not going to have much of an impact. In terms of the government shutdown, I have read that people seem to feel that this one is more likely to happen than the others that have had a threat. But I have to say, historically, for a long time now, decades, we've gotten to this point where there's been the threat of the government shutdown, and then it doesn't happen, except for a couple of times, one being, of course, in 2011, and then everything came right back after a nice big dump in the market. So I wouldn't worry about it right now. However, there is so much contention. It would be certainly a possibility. But we'll see. We'll see. That would certainly impact the market for sure. But it might be a great buying opportunity if that actually happens.
Mish, thanks so much for speaking with us. That was Mish Schneider, Chief Strategist at Market Gauge, giving us her take on some of the trends that we could see moving markets in the days and weeks ahead.